Welcome to the Sarah Finkelstein Show, where we share valuable information and tips to help you and your family get to a better financial place. And today's topic has to do with your mortgage. If you are a home owner, most likely you have gotten a mortgage. Most Americans do not have hundreds of thousands of dollars on hand to pay cash for a home. So what do? They put a down payment, a deposit, maybe 10% or 20%, and then the balance they mortgage. What is a mortgage? A mortgage is a loan. It is a loan to help you pay for the purchase of your home. So let me ask you, do you have a plan in place that protects your mortgage? Now, what do I mean by that? Well, your mortgage has to be paid every month, whatever that amount is, whether your mortgage is $1,000 or $2,000 or $3,000 a month, depending upon the loan that you got, depending upon where you live in this country, but you have a monthly mortgage payment. And what happens to this payment if you should become disabled or the major breadwinner in your house becomes disabled? How is this monthly mortgage amount going to get paid? Do you have a plan in place in the event that you or the major breadwinner in the home becomes disabled? If you become disabled, God forbid, and you cannot go to work, where is the income going to come from to make those monthly payments? What if you become chronically ill? How is your mortgage payment going to be taken care of? What if you have little children? Do you really want to have to move to a different home, a smaller home, maybe a different neighborhood or a different city because you have not the ability to continue making those mortgage payments? Have you ever gotten a mortgage or remember the last time that you got a mortgage or you refinanced your mortgage to take advantage of lower interest rates? Well, if you did that, you might remember shortly thereafter getting a bunch of letters in the mail. And those letters were really marketing literature explaining the importance of having mortgage protection. Do you remember that? Does that ring a bell? Well, that is the way that a lot of companies get you to buy mortgage protection by making you aware of the downfalls of not having protection in place. So what happens if something major, something tragic happens to the breadwinner? If you have mortgage protection in place, it will provide the funds to pay off the mortgage. And typically, if a bank buys mortgage protection on your behalf, you can rest assured that it will cost you a lot more than if you got the mortgage protection on your own. Yes, it is true. Another thing to keep in mind is if the bank provided you with mortgage protection, most likely it provides you with a decreasing amount of coverage. Now, what do I mean by that? Well, over time, your mortgage balance decreases as you continue to pay it off. The outstanding loan amount decreases to a smaller number. And the bank has the decreasing amount attached. So for example, you still pay the same monthly premium for the mortgage protection, but it offers you a smaller amount of coverage as time goes on. Now, is that really the best thing for you and your family? Probably not. And if you purchase mortgage protection, why not have the kind that doesn't decrease? Because if something were to happen to you or the major breadwinner in the household, cannot your family benefit from having the same amount of coverage as opposed to a smaller amount of coverage over time? So my first question to you is, do you have mortgage protection? And if you do, congratulations. My second question to you then would be, what kind of mortgage protection do you have? Do you have the kind that only pays if, God forbid, you pass away or your loved one passes away? Or do you have the kind that provides you with also, while you're alive, living benefits? Meaning, if you become terminally ill, it provides funds. If you have a critical illness, like, God forbid, a stroke or a heart attack or cancer, will your mortgage protection help you then? What if you become chronically ill? Will your mortgage protection help you then? It's important to know what you have. And I'm sure your family wants you to have the most coverage that you possibly can. Now, I know what happens is sometimes people purchase protection and then they just stick it in a drawer and forget about it. But it's a good idea to look at your coverage from time to time to make sure that it's keeping up with your needs and your family's needs, because our needs can change over time. So to summarize, mortgage protection protects you and your family in the event of death or major illness. That's what the mortgage protection is for. And if the bank owns it, they're just protecting themselves. So be proactive and get your own mortgage protection. You are entitled to be in the driver's seat and be in control of this, and explore the different options available to you. Now, I strongly recommend that you work with an independent person, meaning not a person who's tied to one particular company, but somebody who's independent, and basically they work for you, helping you find the best product, the best solution based on your needs and your budget. Join us next time on the Sarah Finkelstein Show. You can also find previous segments of our show. We try to keep to 10 minutes or so. And you can find us on iHeartRadio, SoundCloud, Spotify, YouTube, LinkedIn, Alignable, and you can also Google the Sarah Finkelstein Show.